back. We've been talking about the battle that's raging between Google and China. After months of negotiations, the two heavyweights seem to have hit an impasse, and now Google may shut down its operations in that country. Colin Gillis from BGC Partners is here now to talk about the fight and the possible repercussions. Thank you so much for coming in.
My pleasure, Scarlet. Great to be here.
Great to see you. Now, Google says it's 99.9% sure it's definitely going to pull out of China, shut down. The financial impact, it said, is about $300 million annually that will be lost. You say that that's not material. So what is Google really losing here then?
Yeah, so, really when Google first laid out its accusations against China that they were, trying to crack into Google's systems, this was a situation that was only going to go downhill. We didn't see that there was going to be any, forward mending of the fences. And the reality is that the current revenue impact to Google is immaterial, right? $300 million. But of course, everyone knows that China is a tremendous marketplace. It has the most populous number of internet users and, the fastest growing internet population base.
You don't go into China to make a profit right away. You go there to get a toehold.
That's right. But it doesn't mean that you are ever going to successfully make a profit, right? Because we've seen that there's a lack of, U.S. or foreign-based companies that have had success in China, and that, that string is continuing with Google likely shutting down their Google.cn operations. Now, the real question is, are they still going to be able to sell ads? Are they still going to be able to sell mobile phones? And the reality is that once you get the black mark, it's going to be very difficult for Google to continue operations successfully in China.
Now, once Google makes this official pullout from China, what is the next step? Can it continue to work behind the scenes to limit the damage, or is it too late for that?
Well, that remains to be seen, and that will be the next round of speculation. So the first piece is Google.cn will probably be shut down. Google wants to show unfiltered results on their Google.cn. Now, of course, if you're in China, you could still go to Google.com, or you could still use Gmail services that are hosted elsewhere around the world. But the Chinese government can then go and block those results or slow down those services to make them less appealing to users. Then the third piece is can Google still sell advertising in the country? And most likely that's not going to be the case, in our opinion.
So Baidu.com wins then?
Baidu.com definitely wins.
Okay, Google is obviously not going to be the last country in the world that China deals with, and other countries will be looking to see how China deals with Google as kind of a precedent. What kind of precedent does this set up, really, for Google and other countries?
I think you hit the big point right here, right? So as much as we've always said, Google and China, well, they maybe had only a slim chance of ever being a market leader there. The reality is that there are other countries out there that want to, censor the media, and Google has serious sovereign risk right now. So not only do they have operational risk to their business, but they have political risk. And so what we're seeing in China, we're seeing to lesser degrees in Australia. We're seeing it, in Italy. We've seen privacy concerns flare up in the UK and in France. So, as Google has increased in its scale and scope and also increased the quantity of data that it has available to us, it's increasingly a political target. And so that's something that we have to worry about because, while China revenue was small, international revenue is over half of Google's total. So, we have to be concerned about the political impact as Google continues to increase its operations.
And international growth is where the future lies.
Yeah, it is. Within the U.S. side, we do have the mobile component, which is, a fantastic area for growth. But even in that, there's tension between Google and their major partners, such as, Verizon and the other telco companies. So Google looks a little lonely right now. It doesn't have a lot of friends.
Now, you have a hold rating on Google, and you say that the stock will continue trading in a range for a while. What's a while?
So, well, at least until the summertime, because we think Google is a cyclical stock where it's always better off in the back half of the year, a little bit of the back to school to the holiday shopping time. In the first half of the year, it tends to be a little bit flatter, particularly in the June quarter, where the stock has traded down 4 years in a row after reporting earnings. And then this particular March, we're just a little concerned that people aren't hearing the message from Google that, hey, the investment spigot is back on. You see that they've done 4 acquisitions so far this year. They've done 8 over the last 10 months, and that compares to just 2 in 2008. So clearly the company's back spending, back reinvesting in itself, and that could hurt EPS.
In your latest note, you also talk about issues with competition, particularly Microsoft.
Absolutely. Microsoft is back in the game, right? And so, beforehand, when we had, Yahoo was the #2 player, they were sort of having lots of their own, well-documented internal issues. But with Microsoft taking over Yahoo Search, now they have both the innovation and the engineering, strength, as well as the scale for advertisers to really stand up and take notice. So, you can see Google's market share is sort of flatlined out at 65%. That's a nice market share to have, but nonetheless, it's not getting any bigger. And now you've got Microsoft chipping away pretty hard at the edge.